Let's do this.
Yeah, all right. One more gentleman came in, Larry Jones. Okay, let me share my screen from the beginning, and we'll see the short video about this opportunity. There we go.
Welcome to this investment opportunity video. Today, we are presenting The Pines at Richmond, a 60-unit workforce housing acquisition located in Texarkana, Texas. This project offers a 7% preferred return with a projected annualized return of 17 to 20% on a contract price of $3.25 million. Please note that this video is for informational purposes only and does not constitute an offer to sell or a solicitation to buy securities. Any investment decision should be made after reviewing the full private placement memorandum, which contains important information regarding risks and regulatory compliance. Our leadership team is comprised of seasoned professionals. Roman Kersner, as managing partner, oversees acquisition strategy, capital raising, and overall deal execution. Alexander Kislitsky, as operating partner, is responsible for day-to-day property operations, leasing strategy, and executing our value-add business plan. Our broader management team includes Tim Lovelace, who brings over 5 years of multifamily experience and marketing expertise. Inessa Galuzina contributes deep knowledge in information technology, investment banking, and accounting, while Sergio Menino brings over a decade of full-time professional experience in real estate asset management. Why choose this opportunity? We have an unfair advantage through our established presence in the Texarkana market. This includes deep local market knowledge, pre-negotiated vendor relationships, a proven property management track record, and institutional-grade reporting infrastructure that allows for rapid execution and operational control. Texarkana offers a strong micro-location for workforce housing. With a growing population, stable median household income, and a significant renter population, the market shows positive economic indicators, including a recent year-over-year decline in crime trends. The Pines at Richmond is a 60-unit community that represents a classic, older vintage asset with a clear value-add opportunity. We are focused on improving the exterior and common areas, including the community pool, fitness facilities, and laundry amenities to better serve our tenants. Internally, the property features large, family-friendly floor plans. Our value-add strategy involves moderate renovations to gradually push rents toward our targets of approximately $1,199 for two-bedroom units and $835 for one-bedroom units, while ensuring all property maintenance remains current. Community amenities are a key focus of our operational improvements. We are committed to getting the pool, fitness center, and laundry facilities fully up and running post-acquisition. We target an occupancy rate of over 90% in this stable market, which continues to show consistent annual rent growth. This market analysis highlights Texarkana's steady growth, with positive trends in both city and MSA population. Key employment sectors include trade, manufacturing, and healthcare, providing a solid economic foundation for our workforce housing strategy. We are proactive in our risk management. We have identified and assessed potential challenges ranging from aging infrastructure and construction cost volatility to interest rate risks and broader economic factors, and we have developed plans to address each of these considerations. For an investment of $100,000, we are offering a 7% preferred return over a 5-year target hold period, with projected annualized returns between 17 and 20%. Our capital structure prioritizes investor returns, with a clear waterfall structure for cash flows and sale proceeds. This slide breaks down our sources and uses of capital. We are utilizing a loan assumption for the primary debt, which provides strong coverage at a 2.24x DSCR. Our uses of capital focus on purchase costs, necessary improvements, and robust reserves to ensure long-term stability. We mitigate risk through conservative underwriting, strong debt coverage, and a clear value-add plan. Our management team is ready to execute immediately upon acquisition, and we utilize a waterfall structure that aligns sponsor incentives directly with investor performance. Finally, our exit strategy is flexible. Our primary goal is to sell the property at year 5, but we also have alternative scenarios, including refinancing to return capital to investors, pursuing an early sale if market conditions are favorable, or a portfolio sale to an institutional buyer. We are committed to full transparency through our quarterly communication process. Within 45 days of each quarter end, investors receive comprehensive reports, including financial statements, rent rolls, and variance analysis. We also provide quarterly distributions tax documentation via K-1 forms, property updates, and maintain an investor portal with 24/7 access to all records. This is an exclusive investment opportunity with limited availability on a first-come, first-served basis. We offer a 7% preferred return with projected 5-year annualized returns between 17 and 20%. The minimum investment is $50,000 for qualified investors. Please contact us today to secure your allocation.
Okay. Ideally, that should end the presentation in 5 minutes, but it will not get anyone to be excited. That's like a probably marketing tool that we're using just for fun of it, but it gives overall idea what we will be talking about. And let's start to do that a little bit in more details in what we're doing. And I would love to do presentation. Let me just share the screen, and we all team members are there, so we can do that. Okay. And after we'll finish that, hopefully you'll have more questions and we will be able to answer those. So overall, this is opportunity in treasury market in Texarkana, Texas. It's a 60 units housing complex. We got it off market from our broker who give us this opportunity because we already have existing presence in the same city with a small acquisition of 22 units last year. So we know the market, and that's the best part of it, and it's our really great unfair advantage. Legal disclaimer, like every documents we have to share, that we're not soliciting anything. Everyone should consult their attorneys and accountant, just for information purposes only. We will be dealing with investors accredited and sophisticated. So we will have to follow up the rules of 506C and 506B on FCC documents. All right. I'll talk about myself for 20 seconds, and then every one of team members can represent themselves. So my name is Roman Kirchner. I'm doing real estate full-time since 2005. Before that time, I was a mechanical engineer, was working for Japanese company. They moved that business to Mexico. After that, under NAFTA agreement, became computer programmer and worked 5 years for Bank of America till they moved that business to India. And after that, I decided that's end of my corporate career. So I don't want to deal with this, and I don't want to depend my 9 to 5 to my life. Wellness Holding basically is that marketing company that we're using for this purpose. Okay, my strong position is strong side is I'm good in sourcing deals, doing underwriting, market analysis, and providing people with financials. The next member is Alex. Please talk a little bit about yourself, not too much. You're on mute.
Good evening, everybody. It was nice to see you all together in here. My name is Alexander, and I've been managing a big construction company for 10 years, doing superstructure in Manhattan, as well as I've been running my own construction company. And regarding real estate investing, I've done 21 fixer-uppers in the states of New Jersey, Pennsylvania, as well as I did 14 ground-up construction single families. I was buying the land, doing ground-up, then was selling the houses. And as well, I managed a 42-unit apartment complex in Brooklyn. So I tried each and every possible scenarios in the real estate, and the past 3 years, I completely full-time investing in multifamily apartment complexes. So pretty much it for me. I'm grateful to have a great team, and let's go with the flow.
Okay. All right. And team is another member. We call him Boots on the Ground. He's just about 4 hours away from the Texarkana. He's from
Right. Hello, everyone. Tim Lovelace. I'm down here in Houston, Texas. So I'm only about 4 hours south of Texarkana. Um, so I've been an investor for the past 5 years. I'm a limited partner invested in about 450 units down here in the Sun Belt. So down here in Houston as well as in Atlanta, Georgia. I also have a single family portfolio down here around in the Houston area that I manage myself. But I'm also heavily involved in the oil and gas industry here. And so also as well as a co-GP with these gentlemen in the proper in Texarkana where we have experience with. So
Great, thank you. The next one is Inessa. She's not here today because she's still working. She's still working for corporate world. She's in banking business. She's specializing in accounting, and she joined multifamily. She's fully involved. She joined multifamily 8 years ago, and she's one of our partners. Sergio Manina, he's here. He can talk to himself.
Hi, everybody. Thanks for attending. My name is Sergio Menino. I am in the York, Pennsylvania area, so like South Central PA. I'm a full-time multifamily broker, so spend all my days helping clients buy and sell smaller multifamily investments. Partnered up with these guys to kind of get in on the ownership side a few years back, and we have a very aligned business plan to just acquire good real estate, good multifamily, and we are looking in my market as well, where I'm a broker, but we're really attracted to the Sun Belt right now, the specifically that Texas market. So I've been working with these guys for years, and I kind of advise on the underwriting side, communicate with the brokers, and contract negotiation, that kind of stuff.
Mhm. Thank you, Sergio. All right. So basically, why we're here? Because we believe that we have unfair advantage for a simple reason. We already have experience in this area. We already set our foot on the ground in that particular city. We do have 22 units property in Texarkana. As a result of that, the broker called back and offered this opportunity of market. So that was a nice touch from him. So we're in good relationship with the broker. We have a management on the ground, great management company that holds our expenses around 23%, which is great. We in direct contact with the management company every week, so we know all ins and outs of this particular business. She is the manager. She already visited the property. We asked her to do that, and he gave us her sense. So the property of 60 units located even in better area. It's one of the best area in the city because it's proximity to the college, proximity to the commercial corridor. There's a lot of restaurants and the stores and every service plazas. So that pretty much view of the Texarkana. It's located on positioned right on the border between, for those who don't know, I'm sorry. It's on the border between Texas and Arkansas, northeast of Texas. Literally Central Street divided Arkansas and Texas. They do have two city halls, but it's only city in the United States that has a post office that serves both states, two zip codes. That's famous thing about this city. Population is within our interest. It's about 40,000 people. MSA population a little bit more, about 150,000 people. We're looking for medium household, about $50,000, so people can afford to rent it out. Renters population approximately 44%, 43%. And the last updates from any sources, the crime goes down year over year about 18.4%. The property you saw that on the video. That's the look of the property, and they have swimming pool, and it's nice garden style apartment buildings. Most of them are comprised of 2 bedrooms and 2 bathrooms. Each unit has own laundry, all washer and dryers. Currently, it's 77% occupied, and since we already experiencing management issue, I forgot to mention that not only did we know the area, that we have already our contractors, our management there, but accidentally, and that's how small this world is, we do know the sellers itself. I know them personally. By coincidence, we can talk direct. We can have direct discussion with the sellers, but I don't want to. We don't want to do it. We're working through the brokers. The Texarkana also has a college which is in proximity, which makes this opportunity even better. That's the view of rent-ready apartments in that particular buildings. What we would probably only thing that I would change, and that we will be talking with team members. Probably carpet is not a good idea for rental property. We will change it to the planks, to engineering wood, and maybe we will do anything around exterior. The current rent is below the average market rent, which gives us opportunity to step back. 77% occupancy means 23% of vacancy, and the reason for that is completely mismanaged the property. That's completely mismanaged because the management company that current sellers have, they know the original company, and that's the bad thing about it. They don't care about it. Our management met them, and those people who from management company even don't know which units are vacant, which units are occupied. But be so confident about why it's so mismanaged. Our manager show us few picture of the vacant units that been vacant for few months, and it shows that management even didn't clean up any units after people moved out. So that was enough for me, at least, to say, okay, this is definitely mismanaged. And from talking and having an impression from our management, she supports the same idea. Swimming pool does exist. It's in working conditions, but it needs to be checked and brought up so people can use it, which is not quite usual for Texarkana open swimming pool. Everything needs to be checked, so we will do that inspection during our due diligence period. We trying to get this property on the market. 90% occupied. That's achievable based on results of our efforts on the ground, plus all statistical information shows that average vacancy about 10% for this particular city. Unemployment it's about 4%, and growth. I'm sorry. The Texarkana has few manufacturing facility. One is related to Army, and another related to producing tires for the cars. It also has a huge hospital, as well as it has service employment. That's the breakdown of population and year-over-year growth that you already saw. nothing unusual. We like that market because it's statistically treasury market performs much better than any primary markets. We're not talking about Texas. I mean, we're not talking about Houston, Dallas, San Antonio. We're talking about small city, which is showing that we can do much better than in those cities. Our underwriting, because we're doing underwriting, I'm doing like 2-3 underwriting per day, is based on conservative approach. We even included about $100,000 for capex to make rent-ready apartments. Even though that our manager went to contract with contractors to provide estimates, and he was telling, and we have no reason not to trust him because he is working on our other properties. It's between $5,000 to $6,000 per unit to make it ready. What makes it interesting is that we looking for assumption, so we can assume the loan at 5.3% with 6-year remaining interest only payments, which allowed us to have property perform better and to be able to pay our investors cash on cash. Without assumption, this project will not work. In current conditions, if you will apply for mortgage based on what occupancy they have, we will not be able to acquire normal and institutional mortgage. We will be at 6.5, 6.25%, but it will force us to do bridge loan at between 9 to 10%, which is not sustainable for this particular problem. So only point of interest is assume the loan. That's our effort will be to assume that loan. We're not doing anything crazy in terms of underwriting. We assuming 3% increase in rent, even though that current rent is below market, and our assumption based on between 14 to 15% vacancy, which means that 14 to 15% will stay vacant all year. That's our conservative approach. The $100,000 investment, that's the breakdown how people will get their money and how we came up to 17-20% projected annualized return. We should be able, based on what we underwrote, we should be able to pay our investor in the second quarter. So we'll need about 1 quarter to finalize the repair works and rented it out. That's sources and uses. The red numbers shows the closing acquisition cost, about $200,000 plus investor capital to be raised about $1.3 million, and existing loan is 2.256. We do, as I mentioned, we do have in initial capital improvement for $100,000, insurance premium included here, $45,000, approximately $45,000 been confirmed already by insurance agent that we currently have for the same property. I mean, for the same city. I don't want to repeat this over again because we already covered more or less everything on this slide. From the exit strategy, it's we're looking for 3 to 5 years. Basically, we're looking either to refinance and return people their capital investment and restructure it a little bit, or we can sell it based on conditions and economy. We can sell it individually, or we can offer it as a portfolio with our existing 22 units. That's how we're going to communicate with our people. We will be looking for quarterly distribution. If we need to be on the call, we can be on the call, on Zoom calls. We're good with the calls. Any emails, and every year before March 15, we'll distribute K1 for for the taxes. And for those who don't know about real estate itself, this type of investment presents tremendous opportunity on tax saving. I don't want to touch even base because I'm not tax advisors. None of our team is tax advisors, but it does present an opportunity to save on the taxes. And that concludes my presentation. If you want, you can scan the barcode, at least for two of us. It's me and Alex. We can be reached. We're good with text. We're good with anything that you can offer. And if you will need additional information about other team members, we can provide it as well. So that's and the minimum investment. I forgot to mention the important thing. The minimum investment that we're looking for is $50,000. Not because we don't want to take 25, but with $25,000 and 7% cash on cash, I don't think that you can afford decent restaurant in New York. That's pretty much what we have. I guess we open for any questions, and I would love to hear any questions that you might have.
You had mentioned it was a 506C, but you also said it's a 506B. Are you doing
Yeah,
both type of raises?
If we can attract investors, accredited investors, yes, it's just a little bit more paperwork for us, but it depends also how much they're willing to invest, of course. It will be owned by LLC that will form single purpose entity that will form during our due diligence.
So what was the price again? 3.25 million?
3.25 million, right? 60 units, so it's I don't like idea dividing price by number of units. That might give you wrong information about cost base. That comes from experience, because if you buy based on that idea and you say that it's $50,000, but it requires about another $10,000 in renovation, so your cost base will be a little bit different.
So you're assuming the loan and then they're still getting paid about $1 million. Is that correct?
Yeah.
Okay. And then the washer and dryer upgrade, I thought you had said they were in the units. Is that?
Yeah. The washer and dryers are in the units. We'll have to take a look from each one of them during our inspection as well.
Okay.
But there's also a laundry room, or it's just is there like
just
a
a
central
picture,
laundry room?
basically.
Oh,
There's
just a
no
picture.
laundry, but the property has a office building that, based on our management, they don't have to be there. So the office can be used either for laundry, if anything, or for the gym. It's a
I see.
separate.
So you're planning to transform the office building into some facility?
Yeah, it's not useful to do that and turn it into the any additional units, because it doesn't serve the purpose.
What about the commercial unit? Have you thought about converting it into commercial unit? Like, I don't know, like a little store or anything like that, or maybe cafe for residents?
We will be looking at that opportunity. I cannot tell you if it makes sense or not, because the specific location, it will be close to that particular community for 60 units. I'm not sure if that will be kind of productive. I'm not sure that.
Correct.
Gotcha. So are there any like fees that the residents pay to use the facility? Like for the pool, or if you were to do the gym, like is there like some sort of a maintenance fee that you can charge as an additional revenue?
As of right now, nothing is on the leases, except they paid for their own electric bills.
Correct.
Gotcha.
Our underwriting is based on conservative, based on those 60 units, standard renting them out. And absolutely, you're absolutely right. It's a great question you asked. We're gonna adopt gym. We're all gonna see it right after the inspection, what's possibility, but it's all gonna be part of the extras, extra
Gotcha.
income.
What
Yeah.
about the water? Who's responsible for the water in each unit?
The water it will be paid by the landlord.
And that was obviously accounted in the underwriting as additional
Yeah,
expense?
yeah.
Okay.
We can charge
Um,
back. We can charge back for the water by implementing RAP system.
Gotcha. But maintenance of the pool, I mean, that by itself is obviously an expense. So, are you incorporating that in the underwriting as well? Or this is like an additional.
Not at the moment because we don't know what it will take.
So right now the pool is not operational, so it's not
From
working. The residents are not using it.
from the words that we having from the manager, it is operational, but it's not been turned on. But I cannot trust anything that anyone's saying until I will see it.
Correct. It's
Gotcha.
not season
But
ready.
from a resident's perspective, like if they continue to pay such rent and they had this facility and the amenity, loss of the amenity could cause the reduction in rent or possibly even the residents moving out.
Obviously, it's a good point to tenant retention. Yes, and no, I don't know if that's the what causing people to stay there or what causing people to move out.
Gotcha. We should investigate that because if
Yeah.
that's especially like this with the summer season, it's an outdoor pool.
Just keep in mind, it's a
So
Texas.
if the residents
It's always
had
outdoor season.
Gotcha. Okay. In terms of the rent, what is the population of the subsidies, if any, and whether there are any Airbnb or any other kind of flexible rent or
And
exact opposite fixed rate?
thank you, Vika. Thank you, Victoria. And I know where this question comes from because we do have that Airbnb component in our 22 units, and it works great. So idea is to at least try 1, 2 units for Airbnb, specifically for the reason that it's location-wise because it's a college nearby. So people
Right,
that
right. So the parents come over to
yeah.
visit, so it might not be a bad profit-making
Yeah.
situation.
And from our experiences, you know already, and for those who don't know, the Airbnb, even if it's 50% occupied, it pays more than year-over-year rent, at least 2 times more.
Right. So I guess going back to my question, is there anything implemented right now, or are you more thinking of
No,
potentially implementing it?
nothing. Like I was trying to stress out the absence of management. Nothing has been implemented right now. And by talking with the owners a couple months ago, I said, "Why are you selling?" Because of management. We couldn't find any management, and none of them basically local. None of those people who own that property in state. So obviously, we didn't tell them about our management for obvious reason. But they do have problems with the management itself. Nobody shows up. Nobody replies to anything, and you can see the review on any public sources. I
Gotcha.
would recommend anyone to take a look and do your own research on this particular property.
So currently there are no units on the subsidies, like or any some sort of a
Um,
government assistance.
not as I know, no.
Okay. Are there a lot of delinquencies for the current tenants?
I would say it's a certain. I cannot tell you exact numbers because last updated information that we had was back in March, March or April. So we will be asking for updated information during our due diligence anyway. And that's exactly the question that we're looking for to provide us delinquency and how much and what they're doing. In Texas, as we all know, it's a landlord-friendly state. So it shouldn't take more than a couple weeks to evict anybody from the apartments. And I know how our management using that tactics. She's given 5 days notice to anyone who is 5 days late on the payments, and so far everyone caught up on the payments, no problem whatsoever. And we're talking about different area even. This would be like C plus area, and we have a property in C area.
Gotcha. Yeah, so I think it would be helpful to know the amount of delinquencies, how many apartments, and then also when is the expiration of the current lease so that we can understand whether there's an opportunity to raise the lease rent anytime soon.
That's absolutely. That's a little bit too early to ask because you can ask only when you're under due diligence. They're not going to provide all leases upfront.
So you're not under contract yet then?
We signed a contract probably 3-4 weeks ago, and it was a simple contract. It was presented and created by our brokers. We signed on our side. We sent it out to the sellers. They took another 2 weeks to review it, and because we signed it without even consulting with our attorney, but they sent it back with attorney remarks, and we hire attorney, the same attorney that we had before. So right now we're at the last steps of negotiating the contracts, the last 4 items as of today, because we did get reply from our attorney last night. We review those, we compromise on few and a few items, and we think that we can sign it by the end of this week. I mean, they will sign it by the end of this week. We already signed it.
You said utilities were paid by the tenants? Everything but water?
Electric paid by the tenants.
Mhm. And then this was built
Not
in
the
19...
water.
Yeah, not the water.
Mhm.
This was a 1963 build. Was it remodeled in 85? Because you kind of had 1963 through 85 there.
Yeah, it was renovated a little bit, but the amount of renovation, total amount of capex that's been spent, I cannot answer that until we will see what is there. So we're planning once the contract will be PSA will be signed, the next day we will be planning to move because we already know inspection company. We're happy with what they do. They doing a really good job, which allows us on the previous property that we have for the last 3 quarters we didn't spend any money on. I mean, very little money on repairs based on inspection results and based on what the seller was able to fix, because we present all those inspection results to the seller and ask for either cash, not the cash credit to the loan, but actual cash at the closing. And instead, she said that she will repair everything, and that's what she did, and we verify that. And we want to do the same thing here.
You had mentioned crime. Usually people don't mention crime, so it must have been an issue in Texarkana from my research.
No, it's just our way of doing transparency. Don't be
Okay.
transparent. I'm not hiding away anything. And crime, yeah, a lot of people will be skipping that idea, but crime is in every city that you can touch and you can put your hands on, and you should discuss about it. And because of location, it's a much better area. We don't have any problems in our current location crime-wise. No vandalism, nothing. No even selling and buying drugs. And we don't even need any cameras there. But probably it would be a good idea to put the cameras on 60 units anyway. So you can take a look. You can use everyone only lazy, not using AI. You can use AI and check the crime rate in this particular address. That it does go down year-over-year. Anyone from the team can add something if they want to.
I mean, everything's pretty straightforward in this deal. And as Roman mentioned before, you see what's the opportunities are here. Management company, a few improvements, get back with the pool, So we obviously have good chances to raise the rent, because once all those stuff gonna be back and operatable, we're gonna have better flow of the people. Also, we spoke to the management company and we kindly asked her, Denise, what do you think between our building, which we have right now, 22 unit and 60 unit, this one, based on the area, because I was like literally grinding her. Tell me like which one is better. And she did say this one is better, and since it's got pool, it's more luxury. I mean, luxury, I would say. And I asked her another question, is it going to be difficult to fill in? She was like, no, once you got all those things going, she said, like, I don't see any problems. And it's in a better area than the property we have right now.
Yeah, it's a difference between
Yeah,
C plus and C plus.
that conversation we had like literally week and a half ago. Yeah. And pretty much it. Any more questions? Anyone wants to add up something?
We don't want to torture people for another 40 minutes for no reason.
I understand.
I just have a quick question about the loan, right? So right now, for 6 years, it sounds like a great loan, an assumable loan with interest only, very low rate. I guess what's after, right? That's my main concern. I know the exit strategy. I understood that very clearly. But what if none of those exit strategies actually ultimately becomes available, then what's next? Like, what's going to happen with that loan?
The loan, we still have 6 years, so the holding period that we're planning is 3 to 5. So we're still going to be under interest only payment. Hopefully, and no, I don't have the crystal ball. Nobody has. I don't know what's going to happen tomorrow. Worse to say, what's going to happen in 5 years, and specifically with our economy right now. But if the property works at this point, it should work better in 2 years in terms of interest rates, because right now the overall interest rate is, if it's agency loan, between 6.25 to 6.75. And it's not bad. Having in mind that we will be changing occupancy, so we will be able to refinance if worst case scenario, if we will have 90% occupancy. Or we can sell it. Nothing stopping us. By
And
that time, the prepayment penalty will be gone. Nothing will be holding us from selling it anyway.
also wanted to add, we're not speculating on the market. Like as Roman mentioned before, we're not in the Dallas, we're not Houston, we're not in the big cities, you know. So basically, we're following here organic growth the building.
Yeah. I think that answers the question. Nobody knows what happens in 6 years.
I'm just mostly concerned, what if we won't be able to sell and the rates are going up, so we wouldn't be able to refinance either? So that's my main concern.
It's always the risk involved in investment. What if and how we can manage it, we will see in 2 to 3 years. And we
Right.
still
When
have
when you
time.
when you get the normal loan, like a 30-year mortgage, then at least you're fixed on the rate.
So,
Here, it's like
and
you
if
have a 6 years.
yeah, and if we will be able to refinance it at 5.5 in 2 years, why not? To secure it and to start paying interest, not only interest but principal as well.
Right. Except the mortgage rate will most likely not going to be that low.
Nobody knows. We're talking
It's just
about
gone up.
we're talking about 1.5% difference between what we're talking about, 5.5%, and current one, 6.5, 6.75. So
Yeah,
everything is
The
possible.
Fed is expecting to rate the two rate hikes this year. So just an FYI.
Expectation. Like I'm not president of Federal Reserve Bank yet. I cannot tell you what will happen till the end of this year. That's what they keep saying. That's what I keep following. That's what you've been following and everyone else. Yes, correct. They think that they will raise in rent, but our president insists, and I don't want to get into politics, insist of cutting interest rate. We'll see who's going to be winning on this particular idea.
So what was the interest rate again?
5.53.
5.53. And is it cash flowing now?
It's cash flowing for the sellers based on what I can tell you based on the loan amount that they have and the payment that they have. And even though that they probably will not be able to distribute quarterly to investors, but I don't know if they have any investors.
Yeah, that's a good question, actually.
I have no way of finding it out. Nobody will let us know.
They don't disclose that part, that's for sure.
Yeah, what they paid for that property probably 4 years ago. Yeah, 4 years ago. It's close to $3 million. That's what they paid.
When do you anticipate distributions?
Second quarter after acquisition. At least we need a few months to stabilize it. And as of right now, we even with this, we can pay. It shouldn't be no problem. If
So we don't have
if delinquency is low.
Second quarter, I just want to make sure I understood you, Rome. So is it like the following quarter after the acquisition? So let's say if you get the property in August, you're planning to make a distribution in January for Q4, right?
Yeah.
Okay. So a quarter following the purchase.
I just want to make sure that everyone understands that. Not the first quarter. If we will be lucky, and I don't believe in luck without effort, we can do that a little bit better on distribution first quarter, but I cannot guarantee that. I feel more comfortable telling that we need a few months to stabilize it. But overall, it's a great opportunity, actually. And we love this property. Not so many properties that you can take off from the market without even looking at the market. I mean, it's not been placed on the market.
That's part we are there. Big part.
Yeah. Quite a few people know about Texarkana, which surprises us all the time. And they all say that it's a good market anyway. It's not us saying, it's other people saying. So let us know what documents you will need. Obviously, you will get recording of this one. If we can add anything else, we will be happy to do so.
I'm gonna need the prospectus, right? Remember we talked about it, because otherwise I wouldn't be able to get the approval.
Yeah. No problem. All right. Anyone else? If nobody asking any more questions, I don't want to hold people in front of Zoom. Unless you want to keep talking, that's okay. You good?
Roman, I had a quick question. You have a lot of variables that you said you're waiting to see. So if you have three things that are not good, you're going to be coming back to get a lower price to make all the numbers work?
That's what we did on previous project, and that's what currently, and that's my experience of 20 years. You can retrade. It's not a pretty picture to the sellers, but it's our determination and our way of either staying in the business or moving out. At this point, we put in our own money, into this business because we have to pay earnest money deposits. It's about $35,000. Plus we have to pay for inspections. Plus we have to go there. Plus all this. This is we cannot take this money from investors. That's the money at risk, and we can lose it if we will cross that earnest money deposit due diligence time.
Thank you.
So we are serious about it. All right. Okay. So if no more questions, I'm happy to have all of you here. Thank you for your time. If you need anything,
Thank you so much. Yeah, thank you,
you
Ron.
know where to find us, and we will be holding meetings like that every Thursday at the same time, 7 p.m. Eastern time. If you want to have any additional things, you are very welcome.
Thank you so much.
Thank you.
Thank you.
Thank you. Thank you, everybody.
Have a
Good
good night.
Thank you, Alex.
Thank you.
Yeah. Bye-bye.
Bye.